Welcome to the European Parliamentary Research Service podcast on the European Green Deal Investment Plan.
Despite the Commission's assurances that the long-term work on the European Green Deal will continue in parallel to the coronavirus firefighting, the COVID-19 emergency and the need to deal with its socio-economic consequences is raising concerns that decarbonisation strategies could be derailed.
But is this a real threat, or could it also be an opportunity? There's no lack of voices arguing that green investments need to play a central role in any economic recovery plan. Stay with us.
The von der Leyen Commission took office with one big promise: to transform the Union into a climate-friendly, competitive and inclusive economy. To materialise this vision, in December 2019, the Commission launched the European Green Deal,
which is sort of the roadmap to turn Europe into the first climate-neutral continent by 2050. To do that, we need new laws, new guidelines and a lot of fresh money.
Certainly, €260 billion of additional investment each year over the next decade, to be precise. That's based on the current target of reducing greenhouse gas emissions by 40% by 2030 as compared to 1990 levels.
And considering that the Green Deal plans to increase this target to at least 50%, we'll need even more money. That's why the Green Deal comes with an important attachment, an investment plan to mobilise public and private funding necessary for the green transition.
The investment plan is organised along three main dimensions: funding, an enabling framework and support for implementation. Let's talk money first.
Over the next 10 years, the European Commission wants to mobilise at least €1 trillion of sustainable investment by increasing the resources devoted to climate action under the EU budget and leveraging additional public and private financing.
And the European Investment Bank will play a key role in the mobilisation of additional funding, since it's expected to trigger investment amounting to up to €250 billion in the framework of the investment plan.
So, how will we come to the figure of €1 trillion?
Well, half of the funds, an estimated €503 billion, will come from the EU budget. The Commission has proposed that at least 25% of the post-2020 multi-annual financial framework's resources be allocated to climate-related expenditure by incorporating climate considerations across numerous funds and programmes.
This will trigger additional national co-financing of around €114 billion over this timeframe on climate and environment projects.
InvestEU, the umbrella scheme which brings together the operations currently carried out under the European Fund for Strategic Investments and various financial instruments, will leverage an additional €279 billion of private and public climate and environment related investment over the next 10 years.
It will provide an EU budget guarantee to allow the European Investment Bank and other implementing partners to support more and higher risk projects, crowding in private investors.
And to ensure no one is left behind, the Just Transition mechanism will mobilise around €143 billion of investment, with financing coming from the EU budget, co-financing from member states, as well as contributions from InvestEU and the European Investment Bank.
Lastly, the Innovation and Modernisation Funds, which are not part of the MFF but are financed by a part of the revenues from a key policy tool, the auctioning of carbon allowances under the EU emissions trading system, will provide an extra €25 billion for the EU transition to climate neutrality. The Modernisation Fund will focus on lower income member states in Central and Eastern Europe.
Now do the maths, and it all adds up to at least €1 trillion up to 2030, net of any possible overlaps between components. But money is not all Europe needs for the green transition. It also needs a second dimension, which is also part of the Commission's plan, to include new incentives and laws to put sustainability at the heart of investment decisions across all sectors. And then there's support for implementation.
That's right. This third dimension of the plan is about supporting public administrations and project promoters in identifying and carrying out sustainable projects aligned with the objectives of the European Green Deal.
Now, the debate on the investment plan cannot be separated from the ongoing negotiations on the next long-term budget for the EU, which requires the European Parliament's consent and unanimity in the Council.
And the Parliament, which is traditionally a strong advocate of climate and environmental objectives, has called for an ambitious future budget with resources at the level of the objectives. And these are certainly ambitious.
Yes, they are. But what reactions has the investment plan triggered amongst stakeholders? Stay with us.
Well, analysts from well-established think tanks such as the Bruegel and CEPS have identified both positive elements and possible weaknesses in the Commission's plan, arguing that it is a step in the right direction but would fall short of the resources needed to meet the current climate targets for 2030.
And with the focus of public attention shifting to the COVID-19 emergency, analysts fear this could complicate the fight against climate change at a time when rapid progress is needed.
The impact of the pandemic thus far has indeed raised concerns that decarbonisation strategies could be derailed.
However, analysts and stakeholders generally agree on the continued relevance, arguing that green investment from public and private sources will need to play a central role in any economic recovery plan the EU and its member states put in place.
You're listening to the European Parliamentary Research Service podcasts.